Well, in business news, the heavy borrowings to fund the country's budgets will be reduced considerably this year with the removal of fuel subsidy payments by June. Finance Minister Mrs. Zainab Ahmed made this known at the public presentation and breakdown of the 2023 budget. The minister is also positive that the budget's early passage will boost effective implementation of projects and aid the incoming administration's takeoff. Lara Afolayan reports.
It's the day after the president gave his assent to the 2023 budget. A breakdown is now being presented to the public. Recurrent non-debt spending is estimated at 8.3 trillion, and this includes 200 billion naira for the social investment program. Capital expenditure of 6.46 trillion, which is 30% of total expenditure, is 3.5% lower than that of the preceding year. Debt service at 6.31 trillion is 29% of total expenditure, which is 71% higher than 2022's figure, including interest payment of 1.2 trillion for Ways and Means, which is the federal government's borrowing from the Apex Bank.
We have been able to consistently provide support where support is needed. Of course, the consequence of that is we have had to borrow more than we would have if things were working very well. But we are convinced that reflating the economy is the right measure to take.
While the debt is growing and there's new borrowing, debt is being managed under a public debt management strategy, which is a public document, while on the other side, extremely important, revenue is receiving significant attention.
Revenue totaling 10.49 trillion is available to fund the budget. The budget has a deficit of 11.34 trillion, representing 5.03% of GDP. The deficit is to be financed majorly by loans. 22% of projected revenue is expected from oil-related sources, while 78% is from non-oil sources. The fiscal authorities say oil revenue projections for the 2023 budget are feasible. The payment of fuel subsidy is expected to end by the end of June this year.
We're also going to be exiting fuel subsidy by the middle of the year. So it will mean more revenue accruing to the Federation. Subsidy cost is a cost to the Federation. It eats up into the oil and gas revenue.
The electronic money transfer levy, for that there's a total of 132 billion naira provided for the entire Federation, of which the federal government share is 50% less cost of the collection. But there is still nonetheless something called stamp duty, but that doesn't amount to much.
Highlights of the presentation show 1.88 billion was released as capital vote in the 2022 budget, while 12.87 trillion was the total actual spent.
The 21.8 trillion naira budget for 2023 is 20% higher than that of 2022. With the theme budget of fiscal consolidation and transition, it hopes to put in place fiscal viability as the nation gears up for another administration taking over its economic affairs. Lara Afolayan, TVC News, Abuja.
We're following the malicious and misleading online publication which made several false claims concerning the recent sale of federal government's interest in Polaris Bank. The Central Bank of Nigeria is reiterating that the divestment from Polaris Bank is an institutional decision supervised by the committee comprising senior representatives of AMCON and CBN, coordinated through reputable legal and financial advisors, and approved by the respective leadership and boards of the two institutions. Director of Corporate Communications of the Apex Bank, Mr. Osita Nwanisobi, in a statement noted that no time did any other party make a higher purchase offer as falsely claimed by the online publication. He explained that the divestment was executed based on the relevant laws, global best practices for bank resolutions and requisite regulatory approvals, adding that the SCIL's binding offer involved an immediate upfront consideration of 50 billion naira. And full responsibility for the debt of 1.305 trillion naira owed to AMCON, essentially a total purchase consideration of 1.35 trillion naira. Mr. Nwanisobi further reaffirms that the CBN remains resolute in pursuing its mandate to promote a safe and sound financial system in the country. Reactions have continued to trail the projection by the managing director of the International Monetary Fund, Mrs. Kristalina Georgieva, warning that at least a third of the global economy may slip into recession this year. Speaking on the impact of the projection on the Nigerian economy and, of course, the outlook for the year, partner and a senior economist at SPM Professionals, Mr. Paul Alaje, in a chat with us on Business Nigeria earlier today, he wants government to take stringent measures to sustain its targeted interventions in selected critical sectors like agriculture, manufacturing, export infrastructure, tackling insecurities, as well as free more money from subsidy payments to be able to keep the country's economy on the path of growth and sustainability.
The truth is that the impact of the incoming crisis in a matter of months will be felt by all nations, but the impact will vary from country to country. World Bank earlier, late last year, had issued a report, which I may want to call Warning to Nigeria, and he called it Nigerian Choice. The choice resides with our leaders and those that are making economic policy for us, whether we should continue to have refineries that are dysfunctional and not refine crude from it, or we should support private refinery to come mainstream so that we can reduce pressure that is going to our foreign reserve. That's on one hand. On the second hand, we also need to ask questions as to why we are spending over 3 trillion naira from our budget that we are going to borrow almost half. But 3 trillion naira will go into a subsidy. And that subsidy is not for a whole year, it's for half year. Whether it makes economic sense for us to spend over 6.5 trillion naira, not to pay back debt, but to service debt. Again, we still have to borrow more in that regard. I tell you, we need to start with our biggest fiscal document, which is our budget. And I hope that those that are leading us, we do a review of some of the things that are keeping our hands and legs in shackles, in economic shackles, because the road ahead is tough. It may be tougher than 2015, 2016, and in some cases, even tougher than the recession that was witnessed by many nations in 2020. You have seen what happened in Sri Lanka, where buying things became relatively tougher. I'm not saying Nigeria's situation will get to that, but we need to take decision on time before it is too late.
Paul Alaje there. Today's trading session at the Nigerian Exchange closed positive with a gain in market capitalization. The all-share index increased by 0.11% to close at 51,653.33 points. Market closed positive as Nigerian Breweries, NACO and Living Trust led the gainers chart, with 10% followed by FCMB 9.9% and Fidelity Bank 9.86%. While Champion Breweries topped the losers chart, followed by Unity Bank, Chi PLC, United Bank of Africa, and Jais Bank at the end of trading for today. Asians equities rose today while the dollar was on the back foot after the sharp spike overnight, with investors awaiting minutes from the Federal Reserve's meeting to gauge the path forward for interest rates. MSCI's broadest index of Asian Pacific shares outside of Japan rose 0.91%, set for the third straight day of gains for the year. The index fell 20% in 2022. Japan's Nikkei lost 1.12% in early trade. Australian S&P/ASX 200 index rose 1.28%. China's stocks opened flat, while Hong Kong Hang Seng index opened roughly 1% higher. Investors have pinned their hopes on the swift post-COVID era recovery in China after the country started dismantling strict curbs. Crude oil prices edged lower today after slumping in a previous session, weighed down by concerns about weak demand due to the state of the global economy and China's rising COVID-19 cases. U.S. West Texas Intermediate crude fell to sell at $76.54, with a price decline of 0.51%. Brent crude futures experiences a downward price margin of 0.46%, selling at $81.72 per barrel. Brent crude sells at $82.60 per barrel, with an upward price review of 0.81%. And for the OPEC basket, crude oil dealers are offering $81.14 per barrel, with an uptick of 2.24%.